we're going to be starting off with episode one of MFX Technicals. So let's get started. What I'm going to do is a really short and quick analysis for you on gold. I'm going to pretty much give you my bias. I won't be able to go into too much detail. That's going to be for the MFX family, but I'll pretty much be able to give you my bias, some of the things that I'm looking at, some of the key levels that we can see the market reacting off, and that will give you, I think, that will give you a good idea of where I'm expecting the market to head this week. So what we're going to do is do something called top-down analysis, which is where we look at all the time frames to help us get an indication of where we think the market's going to go. So if we start over on the weekly chart on the left screen, you can see to begin with we have something called an ascending trend line. So we can see that we have the circles to represent where the bounces are. So we have one touch here, we have another touch here, and now right now we're on the third touch. Now not only that, have I spotted that right where we are right now is also in confluence with our weekly support at 1250. So at this area, this is where I'm expecting the market to react off to start going bullish. Two reasons so far. First, we've got the ascending trend line and it's come down to touch it again, and we've got support where you can see the market has reacted off in the past. So if we have a closer look at this area, the 1250s, you can see the market reacted off here. You can see the wicks, the market did react off here. You can see again rejection to the downside as it tried to go below, couldn't hack it, had to come and close above 1250. You can see the market reacting off it beautifully here. So this is obviously support. So now that we're at this area again, it would make sense for the market to react and start going bullish from this point. So we've got two things there. The third thing now is that we have something called a harmonic pattern. This is actually a bat. This is actually a bat pattern. So if I quickly break down why this is a bat pattern, I'll do that really quickly for you. Just give me a second. All right, so all of you that have taken the MFX transformation course would understand exactly how to do the bat pattern. It's really simple. From X to A, you just need to have a 50% retracement. That's where that wick is at. It might not be bang on, but remember guys that Fibonacci is there more of a zone than just being a bang on price. Okay, perfect. So that's the 50%. And then for the D point, all we need to do is have from X to A, we need to have an 88.6 retracement. That's going to tell you where the D point is, which is the price reversal zone for the market to start turning around. And just coincidentally, that turns out to be our bang on our support and bang on our ascending trend line as well. So this, you can see, is a very, very, very highlighted place for the market to start turning around off. So looking at this, what we can do now is start to have a look on the lower time frames to give an indication of what's going on inside, and then what that's going to allow us to do is start to look for any opportunities where we can start getting long on this pair if we see the right price action on the lower time frame. So if we go over to the right screen now, this is, I believe, the H4 chart. Yeah, so this is the 4-hour chart, and then just give me a second guys. All right, perfect. So if I just zoom out to give you an idea where we are, this is this black line right here is that trend line, the ascending one, where we had the third touch. So right now all we are is zoomed in on where that area is. Now having a look at the weekly resistance, the 1250, you can see that the market did manage to break and close below. However, pretty much 3 candles later, the market shot absolutely right back up into this area, which is where we're expecting buys. Anything below this would be looking for sells. And then we had this candlestick formation right here. The next one that came, this is something called a spinning top. The next one's called a doji. They pretty much mean the same thing. It just represents indecision, that the market didn't know what to do. But then straight after that, you can see that we have a strong bullish candle that went and broke above one of my resistance areas, support or resistance, which was at 1253. And because it broke above that, now my bias is for the market to be going up. You can see I've also got an ascending trend line. If we were to go on the lower time frames, you'd probably be able to see it a bit clearer. Give me a second. Here we go. So you can see this ascending trend line. What I've done is I've connected the median of these wicks. You can see we've got a perfect tap in it here, a perfect tap over here, a perfect tap here, and a perfect tap here. Now with these sort of candlestick formations that we're seeing all over this chart, everyone that's taken the course would pretty much understand that this is a bullish setup. So what we're going to be doing is that we're going to be taking long orders, and we're going to be probably taking our first our first take profits are going to be around this green area where you can see the support. The market's acting as support here. The market reacted off the green area and shot up. When we broke below, we came and retested this area and shot back down. So it's likely that if the market comes up to this area, this is where we'll be turning around as well. So we'll have our first take profit here, and then our second targets will be around this blue area, which is also a price reversal zone as well, where you can see with the, the sharp reactions prices had when every single time it came and touched it. So you can see here it dropped, shot right back up. It broke below. When it did break below, it still retested the area, came back up, retested it again. You can see the buyers were coming in very well, not strong, but you can see they were struggling, and then when they did manage to get above, they ended up getting shot back down. That's what the wicks show us. Then we broke and closed below, meaning that this blue area is important, meaning that if we come up to that area again here, again the same situation with the green, that's where we're most likely to turn around. So that's where we're going to put our take profits. So that's pretty much it, a quick analysis for you guys on gold. Hopefully this analysis plays out during the week, and if it does, you guys will be able to see it on your charts and be able to get in on the moves as well. So until next time, I'll see you guys soon.